How to make $5,000 a month with only 25 week. Have you ever wondered how a small, consistent investment can transform into a substantial income stream? What if I told you that with just $25 a week, you could build a portfolio that pays you over $5,000 every month? It might sound too good to be true, but stick around because in this video, I'll share the secret strategy that savvy investors use to turn modest investments into substantial wealth. By the end, you'll see how you can grow a $20 per week investment into a portfolio worth more than $500,000, providing you with financial freedom. Let's dive in. The dream. Everyone dreams of financial independence, where your money works for you even while you sleep. Imagine having a steady stream of income without the daily grind. This dream can be your reality with the right strategy, even if you start with just $25 a week. The key to unlocking this potential lies in a powerful investment approach called the DRIP strategy. The plan. The Dividend Reinvestment Plan, or DRIP, is a strategy that allows your investments to grow exponentially over time. Think of it as planting a small seed and watching it grow into a towering tree. Instead of using soil and water, you use your dividends to buy more shares, which then generate even more dividends, creating a cycle of growth. The mechanism. Here's how DRIP works. When you own shares in a dividend-paying company, you can choose to reinvest your dividends to buy more shares instead of taking them as cash. This means your number of shares increases over time, leading to higher dividend payouts in the future. It's like a snowball rolling down a hill, gaining size and momentum as it goes. The power of compounding. One of the most significant benefits of DRIP is the power of compounding. By reinvesting your dividends, you continually increase your share count, leading to larger dividend payouts each cycle. This compounding effect results in exponential growth over time. An example. Let's break it down with an example. Suppose you buy shares of a stock priced at $20 each, and you own 100 shares. If the company pays a $1 dividend per share annually, you'll receive $100 in dividends in the first year. Instead of cashing out, you reinvest this $100 to buy 5 more shares. Now you own 105 shares. The next year you receive dividends on these 105 shares, giving you 105. This cycle continues, and your investment grows larger each year thanks to the power of compounding. Dollar cost averaging. Another advantage of DRIP is dollar cost averaging. By investing a fixed amount regularly, you buy more shares when prices are low and fewer shares when prices are high. This strategy smooths out the cost per share over time, reducing the impact of market volatility. The automatic advantage. DRIP also offers the convenience of automatic investment. Once you set up a DRIP with your broker, the process of reinvesting dividends happens automatically. You don't have to worry about remembering to reinvest or timing your purchases. It's a seamless way to stay focused on your long-term goals. Supercharging your DRIP strategy. To supercharge your DRIP strategy, consider adding a regular contribution. In this video, I'll show you how investing just $25 per week, $100 per month, or $200 per year can significantly boost your investment journey. Choosing the right stocks. Selecting the right stocks is crucial for a successful DRIP strategy. Here are 4 categories to consider. 1. Blue-chip dividend stocks. These are well-established companies with a history of reliable dividend payments. Examples include Coca-Cola, Johnson & Johnson, and Procter & Gamble. 2. Dividend aristocrats. These companies have increased their dividends for at least 25 consecutive years. Examples include AT&T, ExxonMobil, and Walmart. 3. High-yield dividend stocks. These stocks offer higher than average dividend yields, such as Realty Income Corporation, Ares Capital Corporation, and Verizon Communications. 4. Growth-oriented dividend stocks. These companies combine capital appreciation with dividend income, like Microsoft, Apple, and Visa. Building your portfolio. Based on these criteria, I've selected 5 stocks to boost my portfolio. NextEra Energy, Starbucks, Abbott Laboratories, The Home Depot, and the ProShares S&P 500 Dividend Aristocrats ETF. These stocks have strong dividend yields, impressive dividend growth rates, and solid share price appreciation. The numbers. Let's see how this works in practice. By investing $25 per week, here's how your investment could grow. After 1 year, your weekly contributions grow to $2,560. After 10 years, your investment could reach $27,125. After 20 years, your portfolio could be worth $145,500. After 30 years, your investment could soar to $823,000 with $63,900 in annual dividends, translating to approximately $5,280 per month. The path to financial freedom. In total, this portfolio has the potential to add $786,500 to your investment, with $464,500 coming from reinvested dividends. If you want to learn how to build your own dividend kingdom and achieve $1 million valuation, click the video on the screen. By using DRIP and adding money regularly, you're setting yourself up for exponential growth. Your portfolio will continue to grow as you reinvest dividends and make consistent contributions. Thank you for watching. If you found this video insightful, don't forget to like, subscribe, and hit the notification bell. Let's embark on this journey to financial freedom together. Stay tuned for more tips and strategies to help you achieve your financial dreams.